Hey everybody, this is Richard. I'm going to be doing the review of the algorithms for the fourth week of April. We'll be covering trades that occurred between the 24th of April and the 30th of April. This is the final week of April, and then I will have a separate video where I'll talk about the final results that we saw in April. But towards the end, I will discuss the Wave, Swing, Crusher, and Pro Trader, since I know we still have some clients trading those legacy algorithms. But before I do that, let me go ahead and go over the risk disclaimer. So keep in mind that trading futures involves substantial risk of loss. It's not appropriate for all investors. Feel free to pause this screen if you need to read it in more detail. But just remember, this trading futures is really not for everyone. There's risk involved. And keep in mind, too, that I'm not a commodity trading advisor. We're what's called a third-party trading system developer. And so with that, let's go ahead and jump into the results in the final week that we saw in April. Okay, so the S&P actually closed pretty much flat for the week. So for the fourth week of April, the S&P was flat. And that's one thing I wanted to mention, is to keep that in mind as we look at the results, which will explain why I gave the algos a D. Overall, the S&P momentum algorithm, that's this one here, actually did okay. It had 3 winning trades and then a single stop out, but the market gapped down below our stop, and so that's why the net result on that was a little bit worse than normally what it would have been, but not by a lot. But we did have 3 winning trades followed by a loser. Now, one thing I want to mention is that losing trade was the first losing trade we've had in 16 trades. So we had a 15 win streak that ended on Friday when we got stopped out of that trade. The other trade that we had was the day trade. So we took a loss on that, a stop out, and that ended up being a loss that not only did we see in Phoenix, but also the Crusher and the Pro people would have seen that as well. The difference, though, is on the Pro and Crusher, the stop's a bit tighter, so the loss wasn't quite as big as what we saw on the Phoenix. And then all the algorithms saw the 10-year trade lower from where it was a week ago, but we're still in that trade, and it's actually still up. So even though we were down on that trade, the trade itself is still up, and so it makes it a little bit easier to kind of digest. But because of the way I show the results here, I show the week-to-week results on a net liquidating value. So what that means is it includes any open trade equity. So in other words, we could have had 10 winning trades on the momentum S&P algo, or I guess 4 or 5, a couple winning day trades, and if we close those out, that's great, they're closed out. But if we're still in a trade on the 10-year that's down a lot, then I'll still post that we're net down. In other words, I guess what I'm trying to say, I'm making it more complicated than it is. The results I show here include any open trades that we're in. So I don't hide those trades. If all I did was show the closed trades, then we would never show any of the data from the 10-year until we got out of it. But so hopefully that makes sense. But basically, the 10-year was down, the day trade algorithm took a loss, and then the momentum S&P had 3 winners and 1 loser. Now, normally I would give that if everything acted the way that it typically did for the market condition, I would give it a C. Even if the algo lost or made a little bit, it would have been a C. Reason why I gave it a D is primarily because the 10-year note algorithm, I like to see that either be a little more break even or even up a little bit in the flat market conditions. And so that's one reason why I gave it a D. The other reason is, we had the 3 winning trades on the momentum S&P and then the 1 losing trade on the S&P. That actually, the stop out was a little bit bigger. It was maybe 4 points below our actual stop. And so the losses on that were just slightly bigger than what I would have liked to see on that as well. But honestly, with the flat market condition, a sideways moving market, that has always been our toughest condition. And anyone that has talked to me, watched our videos, or heard me talk about the algos and the different conditions knows that when we have a flat market, in other words, a market that's kind of either up or down, a W pattern, or just sort of goes sideways, that tends to be our worst case scenario. And the reason why is because we'll get into a trade, and if the momentum S&P doesn't get out quick enough, then we might get stopped out as the market goes sideways and kind of goes up and down in a sideways pattern. But overall, not horrible. It could always be worse, but we don't like to see any losses. Nevertheless, it's been a great April, and when I do the April video, I'll discuss more about the entire month, but right now I want to talk about this last week that we had. So with that, let's look at a few of the charts in a little more detail, and then we'll close out the video. Okay, so again, we're going to start by looking at the 10-year, and I already kind of mentioned it, but here's the trade that we entered into on the 14th of April. And so that was actually a couple weeks ago, and that trade actually was up and hit its peak on the 23rd of April. But then on really beginning Monday, it started selling off. Then it did start rallying again, though, the last couple days of April. But when you look at where it closed or where it began the week, which would have been right about up here at 132.14, we did close the week below that level at 132.04. So I would have liked to see that be sideways, but I don't want to read too much into it. This kind of thing happens all the time. In other words, the algos, you have to think of it as sort of an average of all the trades combined. And so there will be times where the S&P is flat or sideways or slightly up, and the 10-year will be down or slightly up or slightly down. But you can't read too much into it. What we have to look for is a longer term pattern on the 10-year. And there's really nothing at all that I'm absolutely not worried about this little blip lower on the 10-year. Because it's really just 1 week in the span of hundreds of weeks that we've done the analysis on, and even traded live with the 10-year. So it's just 1 week, and it's just down a little bit. We're still in the trade, so it's nothing at all that I'm worried about. All right, now the day trade algorithm, that's another one that had a trade this week where last week did not. And I want to zoom in a little bit on this trade so that everyone can kind of see what it did. And again, this is a losing trade, but what occurred was on the 29th, I believe that was Thursday, we had a gap up followed by some strength. In other words, these first two candles, it kind of held up. The algorithm bought, and what happened was the market just sold off pretty rapidly from there. And so we just got stopped out. Now this is, again, 100% normal. There's no one... well, I hope no one looks at our algos and thinks we win every trade, because that not only would just be foolishness, but none of the data we shows that. Everyone knows that we have losing trades. So this is just an example of a losing trade, and it's not easy when it happens, but it is part of the algo. In other words, in order to have these really big gains, and let me find another one that we had, or kind of the last trade we had, which is a really big gain, this one right here, we do have to risk. And when we do that, we're risking the chance that we'll get it wrong and get stopped out. Here's the trade before that. So look, we do have winning trades, but we also have losing trades, and that's really just part of algo trading. On the day trade, it's no one ever likes to see it on the day trade, but it is something that'll happen, and I guess I'm just trying to find that trade again. But there we go. So this is the last week, though, that we had that we're doing the review for. So here's Friday, Thursday, Wednesday, Tuesday, Monday. So again, the market went sideways. We didn't have any trades, had the big gap up. We got in and got stopped out. Not the end of the world, but it's never fun, but it does happen. So with that, let's look at the momentum S&P algo now. Okay, so that's this one here. Now, this is the one that tends to contribute the most to the gains. And again, we had a 15... there we go. Sorry about that. Just forgot that I had it off screen. But here's the chart of the momentum S&P. And again, what this is just showing is this actually shows all of April, and then I'll zoom in on the last week, which is what we're reviewing. But again, we had 15 winning trades in a row for the entire month of April, and we almost closed out April without a single loss until Friday. So we did have a losing trade on Friday, but again, it's all normal. There's nothing, a lot of people, I know, again, it's not fun. I don't want to not be sensitive to the losses, especially if someone just started this week and then they just see a few losses. It can be a little bit rattling, but look, we do have losing trades. Everyone knows that, and so it's no surprise. What I like to do is, instead of just look at the raw and kind of talk about that we had a loss, talk more about how the algo did based on what the market did. And so in this case, the market went sideways. And what you'll see is that the algo actually did exactly what it's designed to do the first 3 days. In other words, on the 26th, it got in and it held overnight and got out towards the close on that Tuesday. And then the market sold off a little bit, but it did get back in, got out on Wednesday with a small gain, and then the market sold off. And then it got in again and got out with a small gain. So as the market went sideways these first 3 days, the algorithm actually did exactly what it should do. It got in and got out. Now, again, we saw that it gapped up here, but no one knew that it was going to gap up like that. I mean, all you see, you have a sideways moving market. It looks great. But then on Thursday, we did have that gap up. And so, of course, it would have been nice if we were still in that trade, but we weren't. And so, not a big deal, because again, the market was going sideways, and we possibly would have got stopped out anyway if we didn't get out at the open. But but I'm not sure where I'm going with this, except to say that the market was going sideways. We had 3 winning trades, but then it did jump back in on Thursday, and this is where it got hit. And so we did have a gap down that stopped us out, and then that pretty much closed out the week for us. So started out pretty good, but then ended with a loss. Now, again, that was a flat, what I consider a flat market, a market that was going sideways. And this algorithm always has struggled in sideways moving markets. It doesn't mean it always loses, but it means that it's one of the more weaker points, because it's sideways. What that means is it still gets into the trades, but because it's sideways, there's more of a chance that it stops out like it did here. Now, what some of you might be wondering is, well, if it's sideways, why get in? Why not just stay on the sideline? To that I say, we don't know it's sideways until it has already happened. So in other words, and this is very key, and most traders get this, but when you're a little bit newer to algos or even to trading, it might not be obvious when you first think about it, because what you hear us talk about is after everything has happened. So we talk about a sideways market. You'll say, well, why even get in if you know it's going to be sideways? We don't know it's going to be sideways. All that we do by saying it's sideways is it helps us analyze, did the algo do, how did it do based on what the market did, in essence. So of course, if we knew the market was going to be sideways, we wouldn't get in, or we would do iron condors, or if we had a way of knowing that, it would actually be super easy, right? But we don't. And so what we do is we place trades based on, for sure, what we think the market will do, but we don't know until it's occurred, unfortunately. So that's okay, though. So we had 3 winners and 1 loser, and this is, again, all 100% normal, which brings me to the other point, and I'll mention this again in the monthly video, but namely that we can't put a lot of hope in 1 week, I guess you could say. In other words, when you have an up-moving month like we had in April, you're going to have these big moves like you see in the first couple weeks, followed by a couple weeks of sideways. And in this sideways condition last week, we actually did really good. In fact, if you remember, if you watch that video, I actually gave us, I believe, an A- because we were actually up even though the market was down slightly. Well, now's a case, though, where the market was just up slightly, but we were down a little bit. And so that's how it works, though. We made a lot on this up move, and then we sort of just do our best to hold on to the gains when the market goes sideways or drifts lower. But this coming week for sure will be interesting to see how we do. But we had a great run. We had 15 winning trades in a row, and then this week we finally had that losing trade that we knew was coming, and it finally did come. So I think that covers though the algos. So let me go back to the other slide, and I'll close out the webinar. Yeah. So as I said, I think that summarizes everything. Overall, not the greatest week for us. Gave it a D. We were down about 9%. So that's not a fun thing to go through, but it is part of trading. We had a really good run of 3 back-to-back winning weeks, and if you look at the end of March, I believe it was at least 4 back-to-back winning weeks that we had. So we knew it was coming, and yeah, we took our few losses, but nothing that I saw gave me any concern at all. If I'm being really critical of the algos, I would say the worst thing I saw was that we had a sideways market and the 10-year trade was actually down a bit. But as you can see, the last few days on the 10-year actually was rallying as the market was selling off. So that's promising. That's good to see, and it's another reason I'm really not worried about it. The day trade, even though we had a stop out on that, its worst condition is actually sideways moving markets, and so I'm really not worried about that. By the way, if you're wondering why, the reason why it's not a down moving market is in down moving markets, when you close the month and the month is down, I believe it's 7 points or more, which happens about a third of the time, the day trade actually can have some really good trades, because in that down month, you're going to have various days where the market's up quite a bit due to these short covering rallies, and the breakout trade actually was designed originally to take advantage of those. So the breakout tends to do really well in down moving and then also up moving markets. Sideways is where it struggles. And then the momentum S&P, that's this one here on the right. That one, it's kind of a mixed bag, but it tends to not do as well in in sideways moving markets. In down moving markets, the reason why I don't mention that really is because it typically will get out of the way. By the time the market is considered a down market, a lot of times it'll be on the sideline already. But of course, its best condition is when the market is steadily going higher. But so overall, gave it a D. And with that, I think I'll close out the video. But if you have any questions, feel free to email me, sales@AlgorithmicTrading.net. Be happy to walk you through anything. What I realize when I do these videos is that everybody really enjoys them, and so I'm going to keep doing them. But what I also notice is that it's very easy for people to misunderstand a few things that I might say, and that a lot of times it could be due to me just not saying something the right way, or kind of misstating or using the wrong word. But so that all said, if you have any questions on any of the videos, or something doesn't sound right, or just sounds off, shoot me an email and make sure that you understood correctly, because none of what I talk about should be shocking or surprising or sound really off. But I will say this: a lot of my customers, especially a lot of people that are watching this right now, have taken various trading classes or read books on it. And it's true that the books can be helpful, the classes can be helpful, but algorithmic trading, in other words, quantitative trading, is really a whole different ballgame. And so it is also possible that things that you do in algorithmic or quantitative trading are different than things that you do when you're just a discretionary trader. So there's that possibility as well. But I encourage you all to reach out to me if you hear anything that just sounds really off, or you have a question on it. I'd be happy to explain it better. And I also appreciate the feedback. So thanks again, everybody, and looking forward to starting May off. And yeah, we'll talk later. All right, bye-bye.